The views and opinions provided on this show are for informational purposes only and should not be misinterpreted as an offer to buy or sell any securities or to make or consider any investment or course of action. For more information, please go to passiveinvestorshow.com.
And now, the Passive Investor Show. Here's your host, John Fortes.
Welcome, PI listeners, to the Passive Investor Show. I'm the Passive Investor Consultant, John Fortes, your host of the only ranked podcast for passive investors in multifamily syndications and real estate funds. Our goal and purpose of this show is to be a resource to investors and help them master their passive investments by beating inflation 1% at a time. Welcome back, ladies and gentlemen, to the Investor 101 series. We hit you with a quick nugget and hope that you can implement it quickly and efficiently and easily. Today, we have Gene Trowbridge. If you want to hear more about Gene, revert back to episode 90. That's where we introduced Gene to our audience. We got your attorney's favorite attorney, Gene Trowbridge. Gene, thank you for coming on the show again. We really appreciate your time.
Thank you, John. I'm happy to be back. It's great. I want to say hi to all your passive investors out there today.
Gene, thanks for coming back on the show. And I know that you're a vital team member to any syndication team. The question I have for you today is, how are these offerings structured with syndicators? And also, how is a blind pool structured?
All right. Well, that's a great question. I think we can build through the structure scenario. And when we get to blind pool, we'll talk about what the benefits are of having a blind pool, both from the investor side and the syndicator side. But John, I think this is where most of your passive investors will start. This is where I started. This picture you see in front of you, my first investment was a single family house. And I learned somewhere along the line that it would be a good idea not to buy that investment house in my own individual name. And that's really an asset protection issue. Because if it's in my own individual name and something happens in that house, all my assets are at risk, John. So you would advise your listeners, and I would advise your listeners, to invest in forming an LLC. And so then the LLC goes out and buys the house. The title is in the name of the LLC. If anything goes wrong, the lawsuit is really driven toward the LLC. And if you've done it right, that's the only asset that's can be attacked by the people who are suing. And the LLC is a limited liability company. So the only liability you would have would be the assets in that company. So that's terrific. So your investors would become members in the LLC and buy the property. Don't you see that happening quite a bit, John?
Absolutely. So we purchase everything under an LLC. Yes.
Good. And this is where a lot of people get started. The issue with that structure is what happens if there's more than just you and your wife or you and your significant other? What happens if you need multiple investors? You're buying a larger property. So that goes into this picture and this structure. And John, this is generally what we work with when we syndicate something or we crowdfunding something, when we have multiple investors. And the issue with the multiple investors is someone has to be the manager. Someone has to run things. So we'd start with a manager LLC. Let's say I was going to put this together and I had found a property. I'd form a manager LLC so I could run everything. And based on the last conversation we had, John, I would bring someone else in there. I'd bring you in there with me. So in that manager LLC, there's continuity. So if the passive asks the question, Gene, what happens if we give you the money and something happens to you? I'd say, well, we don't have to worry about that. I have a plan for continuity. I have John or maybe someone else inside of the manager entity. So that's where we start. And then we go through the same process. We find the property. We form an LLC to own the property, a limited liability company. So all the members of the LLC, their liability is limited to what they've invested. If our investors are going to put up $50,000 each to become a member, something happens to the property, something happens to the world, and there is any lawsuit or any chance of loss, the only thing the investors are liable for is their $50,000 investment. Any money they put in to start with, John, or any promises they made to put in additional money. We do write some offerings, John, where, and you've probably seen these, where the first investment is $50,000, and because they're going to do rehab or renovation on the property that won't get started for a year, the investor promises to put up the second $50,000 12 months from now, and may go so far as signing a note. Okay. Well, if that's the case, then the investor is obligated to the $100,000 because that's what they said they would do. Initial cash and any promises in the future. Those promises would have to be made at that time. And a little later, we're going to talk about capital costs, which is a totally different issue. So the members become members of the investment LLC and advise a single property, and there's a manager that runs it. A topic for another day, and probably someone else that you might have had on your call, or maybe I'll come back and we'll do it again. This is the structure that creates a security, right, John? You've got the members investing money in the common enterprise, which is to buy this one property. Everyone's investing to do the same thing, and they're going to do it for a profit. This is not GoFundMe. This is a business. This is for profit, and it's going to be run by a manager. The results are going to be determined by the action of the manager, and that's what makes it a security. That's what the government wants to regulate. Who are these managers? What are they telling people? What's their background? Are they licensed? Do they need to be licensed? So there's a whole bunch of securities laws that goes into play. And what's the title of my book? It's a Whole New Business. Okay, it goes into play when there's a manager. I'm going to go back here. So there's no manager here, John. So we're going to call this a member managed LLC. So yes, it's an investment of money in a common enterprise with an expectation of profit, but the profit isn't going to be determined by some third party. There's no passive investors in this deal. The members are active. So that's not a security. But in this model, in this structure, the members are your listeners. The members are passive. You and I, as the managers, would be active, and we're making things happen. But now we have to be regulated to some degree because it's a security.
So, Gene, if
yes.
I got this right, so for instance, I'll use a single family home where most investors usually go and buy an investment home, but they buy it in their name instead of an LLC. So there's no liability and protection, right?
No liability protection. California, you'd buy it as in 7 other states, you'd buy it as community property. And now you're tied up in everything you own is at risk. Even if it's just joint tenants or whatever you want to call it. There's no liability protection. The people can go right after everything you own. But if you put that house inside of the LLC, that's the asset that they sue. They can only sue the LLC. Now, some of your listeners are going to say, oh no, they can sue me. Sure, they can sue everyone. You can sue the dog. But if you've run the LLC correctly, you have to have an operating agreement, you have to follow the rules, you're okay. What people are saying is that they've heard of piercing the corporate veil, piercing the LLC veil. Sure, that happens. But that's when you form one of these LLCs and then you forget that it's there, and you run it like it's your own. You're putting cash in and taking cash out, and you're not paying attention to the rules, and you're not filing the annual reports. Well, they'll go right through that and get to you individually. But if you follow the rules and have an operating agreement and follow the operating agreement, you'll be as protected as you can be. Blind pool is really an acquisition strategy, which gives the sponsor the ability to raise the money beforehand and then go out and buy some properties that are available and compete with the other people that are in the market. Commonly, it's the 1031 investors who have all the cash and are ready to close. And,
we really appreciate you sharing all that, Gene. How can we stay in touch with you?
The best way to get a hold of me is my direct phone number, 949-855-8399, and or my email, gene@trowbridgelawgroup.com. And our website is trowbridgelawgroup.com. There's all sorts of fun, exciting stuff.
Gene, thank you for coming on the show again. We really value your time, and thank you for the conversation and what you shared with that audience. Now, PI listeners, don't forget to rate and review the show. We really appreciate it, and it helps us get more guests like Gene on the show. Don't forget to download your free copy of the investment tracker. It allows you to track up to 5 investments, compare sponsors, markets, and most importantly, projected versus actual returns. To get your copy, go to www.projectedreturns.com. PI listeners, thank you for listening. As always, we hope this was the best resource for your investment strategy, but also the best use of your time. Remember, if this episode helps you, you can help us by leaving a review on iTunes. I hope you feel compelled enough to share it with someone you think this would resonate with as well. As much as it pains us to leave you, but you know what time it is. Time to go put this into practice. Till the next time we meet, happy investing. PI listeners, I'm grateful for your time and I appreciate you for listening. It would mean the world to me if you went to iTunes and left a rating and written review. Let me know how you feel about the show. It really makes a big difference with getting the podcast out there. Don't forget about our Facebook group, where all of our guests are members of. I'll be there to answer any of your questions, or even questions you might have for future guests. Subscribe so you can get the latest episodes and our fan favorite quick hitters. Finally, I want to keep you updated, so head over to johnfortes.com and sign up for the newsletter. If you're interested in partnering with me, sign up on the contact page so you can talk to me directly. I look forward to connecting with you. Happy investing.